What is going on, everybody? Thank you so much for being here. There's probably going to be some people who pop in and out of this thing, but I'm doing another live stream and grateful for the opportunity to be able to jump on with you guys and just answer any questions that you guys are having. And if you can hear me, feel free to just say hi in the chat. Feel free to pop questions into the chat, and I'll be getting into those questions. I have other couple questions that I've prepared myself that people have been asking me about this week, and hopefully we can kind of have a productive stream here today. But the productivity is, and the reason that I like to do these things is to help you guys out and to make sure that I'm available and that I'm consistently just answering those burning questions that you guys are having. So without further ado, I'm just going to kind of jump into it. I'm going to get things going here and kind of start talking about some of the things that are pressing right now and some of the questions that I've been getting. And then hopefully as we get into this and people pop on, there'll be some more questions that do come into the thread. Right now in the accounting world, you just had the September 15th deadline pass. The September 15th deadline is the extended partnership and S Corp deadline. It's usually a very busy one. It's usually one that your business owners are waiting till the last minute to get information over and kind of a grind. So, the accountants out there have just been through the grind of the extended business deadline and are now kind of looking forward to that October 15th deadline. And this year, actually, it's the 17th because the 15th falls on a Saturday. But there's those last tax returns, personal extended tax returns, some trust extended tax returns, and then also some December C corporate tax returns are all due October 15th. So as we turn our attention to that, probably over the next 3 weeks or so, we're going to be a little bit busy doing those types of things. But after that, the whole world of tax planning is going to open up. And I'd probably assume that there's going to be a lot of accounts that maybe go on vacation or shut down for a little bit. But we are very focused on tax planning. Tax planning is where, honestly, it's where we create so much value for our clients. And so the planning process is going to be one that is super important for most clients. I mean, there's some that aren't really going to benefit from it, but I would say most people who schedule time to do tax planning really do create some benefit for themselves by doing that, because it does give us a chance to dig into what maybe you are doing or what you're not doing. And so I value tax planning and these sessions a lot. Now, within the Prosperity Society, we are going to do a lot of targeted videos that nail down a lot of the tax planning strategies that I would talk about on the phone. So, that the reason that I kind of love the platform that I'm creating is because instead of having to say the same thing over and over again to 100 people, I'm going to be able to create a bunch of videos and give people a chance to watch those videos and kind of just see what piques each person's interest. It really does make our calls so much more productive when we do that. So that is something that we will be doing after the October 17th deadline. We're going to be targeting in on those tax planning videos. We're going to start nailing down appointments with people who need to get their ducks in a row, maybe created a new business and don't know what to do with it. Maybe it's people that have a lot of income this year and need to understand how they can reduce their liability. We're going to be throwing out all kinds of ideas that are going to do that. But you're going to have to be plugged into this to really get the most value and benefit from it. So that's kind of a little bit about what's going on in the world of accounting right now. Deadlines, extended deadlines, probably a little less sleep than usual for a guy like me. But definitely want to just plant some seeds for you so that you understand that the next chapter after these deadlines pass is where the CPA community really, really creates a lot of value, and the Prosperity Society is going to create a lot of value in your tax situation. So that's what we'll be doing. Seeds are planted, you understand, and I will definitely be talking a little bit more about this. The first question that I want to get into revolves around Social Security. Every year, I'm going to get people that come to me that just kind of say, I'm not quite sure what to do about my Social Security situation. And as some of you have gotten to this situation are well aware, there's different ages that you can retire at and start claiming Social Security. And the Social Security Administration will be very transparent with you in sending you documentation that kind of says, hey, if you retire right now, you're going to get $3,000 a month. If you wait another year, you're going to get $3,200 a month. If you wait 3 years, you're going to get $3,600 a month. And so there's this cost-benefit analysis that really needs to be done to try to determine when is an ideal time for you to retire and start claiming Social Security. So I had a client this week who was in and wanted to kind of go through these different scenarios. Scenario number one that they wanted to go through was, well, what if I'm still working and still doing some side projects and that sort of thing? What does Social Security have to do with my taxes? Am I going to get taxed a lot of money on it, or how does that work? So one thing to be well aware of is that if you aren't making any other income, Social Security is not going to necessarily be taxable to you. Low-income people who receive Social Security only don't typically need to file. But what ends up happening a lot of times is maybe you've got an IRA, or you've got a pension, or maybe you do a little bit of side consulting work or something along those lines that does generate income for you. So you may have $50,000 or $100,000 a year in pension income. And so when you start claiming Social Security, it's kind of like, well, what does that mean? So some of the analysis that we went through is we said, okay, well, if you're making this amount of money for the next 5 years or the next 20 years, you're getting a pension. If you're making this X amount of money, then this is the impact that Social Security is going to have on your tax situation. So in the specific one that we ended up going through, we plugged it into the tax calculator, went through the planning on it. And I think at first maybe his thought was, well, if I'm making money right now, maybe I'll just wait to take Social Security a few more years. And so, we went through it, essentially calculated out what the taxes would be on $38,000 of Social Security. It was going to be about $4,200 worth of tax. So a net benefit of about $33,000 or $34,000. Well, then we went and kind of looked at the chart, and we were like, okay, if you wait 2 more, he's like, well, if I wait 2 more years, then my benefit's going to go up $350 a month. Well, then you start doing the math, and you're like, okay, well, $350 a month, that's fine, but you would have had 2 years of Social Security at $38,000 that you could collect. So you have this idea of, well, I netted $34,000 times 2, that's $68,000. How many months is it going to take for me to recoup that $68,000? Is it going to be worth it? So then we ran the numbers, and we're like, well, you're going to have to live for, you'd have to live for, until you're in your 80s before the cost benefit really actually starts being in the positive for you. So there's that kind of analysis that kind of goes into when we should be taking Social Security. And that was kind of a sit-down conversation that we were able to have and go through and run those numbers. Now, that person's going to take Social Security now and start collecting the money. And so one little simple half an hour discussion ends up putting $30,000+ in his pocket, whereas his initial inkling was to wait. So you can see how some of that might be beneficial. Definitely want to have conversation when it comes to a plan for Social Security and see how that kind of works for you. So really good stuff there. Another thing that's kind of been really on the forefront right now that I've been getting into is bookkeeping. And bookkeeping is so important in a business. For those people who have a competent bookkeeper, and I've talked a lot about this, you know the benefits that come along with it as far as accuracy, as far as staying on top of your financial statements. When a competent bookkeeper has come to us and we do tax returns for their clients and all that sort of thing, the work is so much easier on our side. And so we've gotten into bookkeeping quite a bit from the mindset of people who are using competent bookkeepers versus people who are not using competent bookkeepers, and what those differences can be. And I think one thing that's kind of happening for me just naturally is you kind of hear the rumors as far as IRS hiring 87,000 new employees. Not all of them are just going to be armed and ready to come audit everybody, but there's definitely going to be more scrutiny into what we're all doing. And so for me, I've kind of taken that opportunity to just think more about how we can be more compliant, how we can have all our ducks in a row. Because like I just had a client that got audited, and they're being very direct with very minor things. They're going digging very, very deep to try to get some kind of changes. And when you start to see that, you're like, wow, there's really a big need for us to kind of be on guard for that. So competent bookkeeping is super important, and it really does make a difference on the bottom line. Let me give an example of something that we recently have seen. So one of the things that we do when we go through a business tax return is we do a tie out on the balance sheet on all the different assets and liabilities that you have. And so credit card liabilities would be one of those things. So if you have a business credit card, this is something that kind of gets goofed up a lot in bookkeeping, especially from somebody that's not super competent. The bookkeeping, they may end up just saying, hey, we're just going to record the payment to the credit card. Oh, they're all business expenses. But a lot of times those business expenses are all different things. They could be supplies, they could be business meals, and sometimes those things are treated differently for tax purposes. And sometimes they're never even really captured and recorded at all. And so, there is a reconciliation process that needs to happen with credit cards. And so one of the things that we noticed when we were doing a specific one is that the credit card reconciliation, something didn't add up. We're going through the numbers and we're like, something not quite right here. And so we kind of push it back to bookkeeping team, and it turned out that there was a couple months worth of statements that were missing. And when you have a couple months worth of statements missing, that means there's a couple months worth of expenses that were missing. And so because of that due diligence, because we kind of were going through that, they were able to just kind of circle back and go through those statements and fix it before we ended up submitting the tax return. Everything ended up working out fine. That's why we check and double check all those types of things so that people are not left hanging. But again, in the end, the net income was way less. And we were able to bring down net income because there was other expenses that needed to be included. Client ended up saving money. Bookkeepers kind of understood, hey, this is kind of what ended up happening and where it didn't work out. Everybody kind of learned from it, but being able to dot those I's, cross those T's are super important in the process. And so, you want to make sure that from a bookkeeping standpoint, you're looking for tips to make your books even better. And that I think bookkeeping can always be improved. Even my own bookkeeping, when I was doing my own business tax return, definitely had some things where I'm like, oh, I'm going to move these, categorize these different ways and different stuff like that. So we always can be making those tweaks to bookkeeping, and it should be something that is on the front of our minds. All right, I do want to say, feel free to push some questions into the queue here. I'm getting I do have a question that I've got on Facebook that I'm gonna go ahead and answer, but I've got somebody that says that they just recently, it's a medical professional, but they recently set up a business and are going to be getting a 1099. Number one, what kind of entity should I set up? And number two, what are some of the things that we can be deducting? So number one, this person's in the medical field and they have certain licenses and that sort of stuff. And so usually when you're credentialed and all that sort of stuff, I tend to lean towards setting up a PLLC. It's an LLC, it's a professional LLC. But no different than pretty much a regular LLC, but you have the professional certification, credentialing that goes along with whatever your job is. And so I had suggested to this person that they set up an LLC, a PLLC, and also ask them how much money they think that they will be making from this job that they're going to have. And so the number was over 100,000. So I said, what we'll do is we'll do a PLLC and set it up as an S corporation. We would want to make the election with a 2553 to make it an S corporation. And so, that gets the ball rolling on a lot of different things. I've done a lot of videos in Prosperity Society related to this, so I won't go too far into it. But once we ended up kind of understanding that was kind of the process and the direction that we were going to go, I started getting some interesting questions about what kind of deductions can be taken. And one of the things that came up is, are we allowed to deduct massages while we're traveling? And so, I think when people ask questions, like, I don't want to just be like yes or no. Like, I kind of want to dig into and kind of get a little bit more detail when it comes to what you're doing. If there is a way that we could kind of figure out how to maybe deduct that, then possibly we would go for that. But so I said, well, what's the purpose of traveling first? When you're traveling, are you traveling for business, or are you just talking about vacations? And so it was like, no. My wife would be going and traveling and getting, it would be to have continuing education, and would be, definitely 4 hours a day plus of working and education and all that sort of stuff. So I'm like, okay, so from a business travel standpoint, that kind of checks the box. Okay, you're out traveling. Now, they're holistic medical professionals. So you have like a holistic doctor who's a little bit, alternative in the way that they do things. Traditional medicine is something that, is typically avoided. And so now I'm kind of digging in a little bit deeper. Okay, now, are the massages something that she's going to be doing? Like, is this something that is there, education within the techniques, I guess, is where I was going with that. And then it's like, well, yes, it would be. It would be to be learning how to treat, different, shoulders and different things like that. And so, then it kind of became, okay, well, you know what? Actually, maybe there is some business purpose to that. I think if somebody asked me, can I deduct my massages? I would probably have said, no, you can't. But once you kind of dig into what it is that they're doing, well, now you're kind of like, okay, I could kind of understand maybe why this could have business purpose. Now, I kind of joke with them and I said, listen, if you guys are just traveling and trying to get a couples massage and you think because now you have a business that like you could just swipe your business card and write it off, then that's not really going to be a business expense. But if this is something that you are going to be using within your practice and you need to understand, how to utilize that, then maybe that would be something that could, potentially check those boxes of what is deductible. A lot of times I get people who call and also want to talk about their vehicles and how they can deduct their vehicles. I've got to emphasize this. This is something that not enough people are doing. But if you want to take a deduction with your vehicle, you have to keep a mileage log. You've got to keep a mileage log. You have to keep track of what your business mileage is versus your personal mileage. It is so important and imperative that you guys understand this, because when I'm going through my process and I'm trying to understand, what we can be taking for a business mileage deduction, a lot of times I have people say, well, I'd have to go kind of figure it out. And unfortunately for the IRS, they don't care about figuring it out. They want you to have this record on a contemporaneous basis. You have to kind of keep this record as you go. And so a lot of times people email me back and they'll say something like, I had 20,000 miles. And I'm like, exactly 20,000 miles. No, you could just tell that people are guessing. Well, then you're like, well, how much of those were business miles versus personal miles? And then it's like another eye roll. The people have no idea. If you have no idea, you really probably shouldn't be taking a deduction for it. So I really just want to emphasize how important it is to be having a mileage log. I also want to emphasize how important it is to be keeping your receipts. A lot of times when people get audited by the IRS, they're coming back a few years later. And so you may get audited right now for 2019 or 2020. And depending on the scope of the audit and what they're looking at, they may end up saying something along the lines of, well, hey, we want to see these receipts for auto repairs that you ended up doing to your business vehicle from November of 2019. You spent $3,000 on repairs. They actually want to see the receipt. And if you didn't have the receipt, they probably would disallow the deduction. It wouldn't be enough for you to be like, hey, here it is on my credit card statement. You can't do that. You have to be able to show the line-by-line receipt that shows what was being paid for there. So, those are some of the things that when a new business owner or even existing business owners come to me and they start asking about it, I'm really trying to, formulate in people's heads that these are some of the things that are really, really important for people to check. Now, getting to the mileage thing, and thank you for the comment on this, is if you have QuickBooks Online, all right, there's a mileage tracker through QuickBooks mobile app, okay? And it's one of those things where you probably are going to want a tool to do all of this stuff, right? So I just dropped a couple things on you, right? I just dropped on you keeping receipts. I just dropped on you keeping mileage log, and being focused on due diligence. And so think about your tools that you could have, and you might not know the tools. You might need a really good bookkeeping consultant that helps you implement those tools. But like it's mentioned in the thread here, definitely have on QBO tools to be able to track mileage. All right. Another one is receipt capture that is through QBO. You'll be able to pull in receipts and take pictures of them, and they'll save digital copies of the receipts so that you do have a record of them. So there are tools out there that are there to make this process, simpler. I'm not going to say easy, because it is annoying to be able to have to go on and take pictures of everything. It is annoying maybe to go through your app and turn location and all that sort of stuff on. I totally understand that sort of stuff, but at the same time, I want to emphasize that if you want the deductions for all this sort of stuff, the burden of proof lies solely on you to be able to provide some of that evidence to the IRS if they were to come asking about it. I've definitely had my share of people who have said before, hey, if the IRS, challenges me, if they come challenge me, I know it's on me to be able to provide this stuff. So, you want to be able to justify, some of the expenses that you are taking. All right, if let's see, what else do we got? If we got any other questions, I'm encouraging you to drop them in. We'll probably just spend a few more minutes here, just kind of running through some things. But if you have those questions, I would love for you to just drop those in. There will be a lot of people who kind of watch this thing afterwards, and so your questions are always super valuable. And if it's a question you have, it's most likely that somebody else has that same exact question as well. But the last thing that I kind of want to talk about, and if anybody puts anything in there, I'll touch on that too, is just kind of the vision of prosperity and what we're going to be doing with this. Some of the things that we're talking about right now are much farther than the scope of just tax work. We want to talk about how we're successful in life, and there's a lot of different elements that come through it. Through business, taxes is important, bookkeeping's important, but after you've made money, you've become successful in business, well, then there's an investing component to it. We have family components, we have leadership components, management components. These are all things that we are going to build upon with our platform, coming up in the future here. And so, I really encourage you to look at our platform, look at the videos that we have been posting, and just understand that there's going to be a lot more that we are going to be posting, especially after I get outside of the tax season window. A lot of times during tax season, I get a little bogged down with tax compliance and all that sort of stuff. But this is a community that we're totally going to grow. And on the website, on rnwprosperitySociety.com, you're going to be able to kind of just click through some of that and see some of the stuff that we're doing. I do know a lot of my clients value being able to call and ask questions and all that sort of stuff. And when they're doing that, this is the kind of stuff that I'm kind of bringing to this platform automatically, because a lot of people have these same questions, and we really do want to just kind of build that database and build that understanding of what it takes to be really successful in what we're doing. So a lot more to come on prosperity, a lot more videos like this to come, a lot more opportunity to ask questions, to get professional advice at a very, very reduced rate. And I just want to encourage people to dig into this a little bit more and catch a glimpse of the vision of what we're kind of putting together here. And but anyways, want to thank everybody who's watched live. Also want to thank everybody who will take a look at this afterwards. And I hope everybody has a great one. We'll do another one probably right after the October 17th deadline. All right, have a great month, everyone.